Hello and welcome to another episode of Casual Friday, brought to you by the FTX app. Links available in the description below. Last week was a better week to use the app because number was up. This week, given the portfolio tracking features, maybe you want to just leave it on the back burner a little bit. Maybe get some mental health apps. There are a few of those: meditation, yoga, therapy. Those might be more useful for the recent price action. But nonetheless, check them out in the links available in the description below. Spot trading, no liquidation, so at least you can't blame that. Swap from one asset to another and track your portfolio or hide your portfolio, which is becoming an increasingly useful feature. But they've been long-term supporters of the show and the newsletter. The show and the newsletter outtraded both of us consistently. So, if not least, to keep those going, make sure to have the app on your phone and tell them we sent you, all that type of good stuff. And hopefully we'll also have some leverage. I know I say this every week at this point, but there is some sort of leverage trading oriented content that is basically ready. We just need the green light, and then we'll be able to share that with you. That's a long intro. Don, how are you? What's up?
Good. I mean, prices
What's
aren't
down?
good.
Yeah.
Yeah, I was like, I cannot make this joke every time because prices are definitely not up, but yeah, not that
Listen, in
much,
in this
honestly.
trend, we're going to end up making this joke a lot, it seems.
Yeah.
You've had an interesting week on Twitter. Again, you always know the market's moving when you have an interesting week on Twitter.
Oh, yes.
Specifically, I always find that the market's going to do something interesting when you're forced to defend your positioning for no clear reason whatsoever. So if you're
hmm
buying stuff that's mega crushed, then you have to fight people on Twitter and in your YouTube comments. That's should raise an eyebrow. And in the same vein, if you're taking profits on things and it has a similar effect, that ends up being somewhat telling. We will talk about the merge stuff being priced in, CPI, and all of that. But I think if I wanted to steal because a lot of people were annoyed about what seemed like flip flopping from your side, right? Where you come on
Yes.
one stream and say, for example, oh well, 20k, we can stay here for months, if not years, and still round up. ETH still looks amazing, and the monthly chart looks nothing happened, and it's going to make people panic. The weekly chart looks like a perfect type of pullback in an uptrend, etc. And then you dump everything, and it goes to zero, right? So I can understand why at face value some people are like, what the fuck does this guy actually think? Slash, why what could possibly change his views with such not just frequency, but also just from going from 2300 ETH to good luck at the lows type of ETH, right?
Yes.
So I guess let's get before I do the sort of summary TA on BTC and ETH. What changed your mind in the since last show and last weekly open and so on and so forth?
I mean, for one, the merge trade kind of got way too popular. Basically, this is always the case, really. Sentiment on these kind of things flips very, very fast, and I felt like it was getting way too popular. You saw it in news outlets, like traditional news outlets, um, and you saw a lot of kind of speculation about a bunch of people are short ETH because of funding, all that kind of stuff. And then also you had this S&P rally into Friday, right? So we talked last time. Last time we talked, where I basically made the comments that everything looks good still. That was in the morning, and then the S&P started really rallying on that Friday, right? So it actually got all the way to resistance, almost closed at resistance on Friday, and then I was like, okay, on Monday it's gonna attack that resistance, and I think it's gonna just pull back. I don't think just technically it's gonna look good, and I don't like the entire setup anymore as much. Just from that Friday rally, like Friday into resistance, usually especially market conditions like this, it's just not the best look, because then what you usually get is just crypto markets do their things on the weekend, and then the S&P just takes it all back again. And we basically had a FOMO rally on that weekend into resistance, right? It's just running into ETH was running into lower time frame resistance and into an area where it could make a lower high. And I was just like, okay, this is starting to look pretty bad. I had a few other things that came up that I don't want to share, but
It's counter
that's
trading me,
basic.
isn't it? Just say it out loud.
No,
The
no,
audience
no, no.
deserves to know.
But yeah, that's there was a lot of things. It kind of began slowly. So Friday morning, I still had like quite the high conviction that we're gonna go up, and I mean, we did, right? Friday, Saturday, Sunday, like were all good days for crypto. But the more we went up, basically, the more nervous I got. I didn't like the move at all. So I was just like, okay, I'm gonna sell into this. This seems like a thin move. Seems like a bullshit move. I don't want to have anything to do with it. So basically, I sat down Saturday night, Sunday, and just started like selling. And
That's how
but
a
I,
real man spends his weekends, eh? Saturday and Sunday night, it's like people out there partying. You're at your desk, just sell, sell,
oh
sell,
yeah,
close, close.
and it's a pain in the ass every time, but it's just you have to do it, right? And sometimes you get these gut feelings too. Like I'm not saying this is 100% based on like reasoning alone. I just had a very very strong gut feeling on top of it. I was like, okay, this just seems very very bad. And the more like the longer I am in the market, the more I trust it,
Cool.
to at least de-risk. Right? I wouldn't necessarily short off of like a gut feeling, but if I have like good evidence that a move is thin, and then my gut tells me, okay, this is all gonna crash. I will get out. Right? It's just how it goes. And I mean, I've been in that trade for a long time, right? And I didn't get that like strong feeling once, and then I did it. Like I did get it, and I was like, okay, I've kind of milked this for long enough. My target was 1.8k for ETH. We're at 1.75. At that point, I was like, okay, this is more than enough. I'm kind of greeding here, and so I reversed my position. Um,
You sell everything, so like liquid positions wise, Solana, ETH, Atom, the BTC you had, we just like
yes,
sell, 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 sell.
yeah, so like I had sold Atom, like I did sell Atom basically on early weekend. And then like I just kept on selling. I was like, okay, I'm just gonna lighten up a little bit. And the next day I felt even worse. I was like, okay, this is just shit. I don't like these positions anymore. So I sold those too. Sold a bunch of NFTs as well, so I could get the ETH to sell that too, which is like a fool's game. I cannot recommend. But I was just like, okay, I'm just gonna
What do
like
you mean? It's not a great idea to trade illiquid instruments in a downtrend? Like, what are you talking
yes.
about?
No, but honestly, like the thing is, with the NFT side of things, it's just never gonna get liquidity when you need it.
Yeah, sure.
Um,
And when you have it,
you're
you shouldn't be selling, type of thing, right? Almost.
yeah, exactly. And then
That's when it's going up.
there's only gonna be one point where you have liquidity and where you should be selling. That's the giga top, and that's like a really that's a shitty thing, right? Because you don't want to necessarily sell the top, because if you sell like let's say you buy in Bored Ape, right, for 1 ETH and it goes to 10, you could try to sell there because it's 10x, and it seems like that's like a pretty good price to sell. And then it goes to 100, and you're sitting there being super mad at yourself. But like you're never gonna, and that's the thing, right? But if it goes down from 100 to like 80 or whatever, you're not going to be able to sell anywhere close where you want to sell. For example, like I have like I actually have a couple of Bored Apes, and I tried to sell and it just wouldn't go. Like I was the floor
Mm.
for a couple of days, and I could not sell a single one. So I was just like, okay, fuck it, I'm just gonna keep it, I guess. And
Time to
like
join the
that's
Discord and see what's up, right? Like, get into it. If you
yeah, and I
can't
mean
sell,
that's
might as well lean into it and
yeah. Now
give
I'm a
away your
forever
seed
back
phrase.
holder.
That's the first order of business.
But yeah, that's kind of the story. Like I still have exposure to the market. I still have NFTs because you cannot sell them. I think on like in total, I made like quite a bit on ETH just because ETH went up from 1k where I bought to 1.75. That's a pretty good trade. I made a good amount on Atom because that went from basically, I think I bought it like sub 12, and that went all the way to 17.
The classic
So
newsletter trade as well, because you
yeah, and the
chilled it into
newsletter had
crypto.
that too. Yeah, exactly. And
I love how we've
Solana
even
just
stopped pretending in technical roundup to a large extent. It's like, look, Don likes the chart. We can draw stuff on it, and I can write something about it. But just that gut feeling sometimes permeates into the newsletter.
yeah,
But I mean,
and
that hit resistance. I think the broader point, is just like, look, you were in these positions for a while. They hit like your preliminary targets, because I don't think any of
yes,
this was like absolutely shocking. That, oh my god, he sold here. I never heard him even mention this price point. Right? It was all fairly foreseeable, like in our discussions. And then the
yes,
news ran out. The
basically,
macro
yeah,
ended up being shit, and the whole intangible gut feeling stuff at resistance ish. is more than enough. I think that's very
Yeah.
reasonable.
And I
Uh,
want to say one more thing.
sure.
And that was basically like I've kept on talking on this show and every single show I went on, basically, and in like everywhere I kind of like shared my position. I was like, I want to sell a week before the merge.
Yeah, that's
And
true. I remember
then
that.
I was like, maybe I don't want to sell into the merge because people are wrongly positioned. And then the moment I saw that switch, right, and people were positioning for the merge, I was like, okay, now we are like 3 days ahead of the merge. And my reasoning for selling before was because it's going to be probably a sell the news event. And so I want to be selling, especially when I see the positions flip. And that's what I
At
did.
that time as well, right? Of all
Yeah.
times.
So that's kind of like a big part of the reason too.
Yeah, I think that's all fairly straightforward. I guess almost from like an educational point of view, as far as what does it mean, kind of this whole sell the news thing. Well, the saying is buy the rumor, sell the news, right? And the
Yeah.
basic logic baked in there is that because markets are forward-looking, future discounting mechanisms, whatever you want to call them, um, the impact of a news event will often be quote unquote baked into the price of an asset ahead of the news event itself as people start to speculate on it, right? So
Yes.
if you know there's a very negative news event coming in 1 or 2 weeks, you don't want to be selling in 1 or 2 weeks because a lot of the speculators have already put on that trade and want to lighten up once the catalyst is gone, right? And the same goes for buy the rumor, well, that's the bearish example, right? But the buy the rumor, sell the news example is, you're buying something in anticipation of a positive catalyst, but you kind of have to think ahead, right? What happens when the positive catalyst is here slash plays out? Well, one way to view it is that the positive catalyst is gone once that
Yes.
happens, once the news hits, and then everyone is left. Everyone who was focused or concentrated around the same parameters is then rushing for the exit at the same time. And we know from a market impact point of view, when you have everyone rushing for the exit at the same time, you're not going to be able to get a good exit, which is where the logic comes from, that you buy in anticipation of the event as the market begins to speculate on it, but you don't want to be the last one holding the bag once the news event is actually here, comes into action, whatever it may be, and especially in the absence of another one right behind it, your reason for the trade basically vanishes. And you can wait for the last second to sell, but knowing that markets already started buying ahead of the event, they're probably going to be selling ahead of the event, and vice
Exactly.
versa, right?
And obviously, it depends on the market conditions, right?
Yes.
So this is how you trade in the bear market. Very clearly, you have like the market goes down, and then you have a reason for it to go up. So everyone looks at that reason and they buy. But like you said, once that reason disappears, what are you left with? You're left with a bear market, right? And I know that that sounds like a very pessimistic way of thinking, but that's how you have to think in bear markets. And we are in a massive bear market right now, right? I mean, Bitcoin went from 60 to like below 20. ETH went from 5K to 800 or 900. So, given the market situation, that's just kind of the way you have to think. And if that reverses, right, you don't want to be selling, like buying the rumors, selling the news in the bull market. It's very,
Yeah.
very different because at
You,
that
you want to
point,
buy the rumor and add on news.
Seriously, yeah. Because I mean, then you have like people are like, okay, imagine the situation that we're in right now, like with the merge being in a bull market, right? You
Oh
could,
god, man.
it's the same with Bitcoin, like, oh, Bitcoin halved, and now there's less people to sell, and then this thing goes up. It didn't go up because less people were there to sell, right? I think that's still like, it's just not how it works. It's just, it was a bull market, so it kind of like people buy and people hold, and at some point it's like, okay, there's no place out like other than up to go to because everyone wants to have it. And in the bear market, you have these kind of events. With ETH, for example, you could argue, okay, ETH is close to deflationary now or is deflationary. In a bull market, that would be more than enough fuel for people to FOMO, being like, hey, I cannot get much more of this. In a bear market, it's like, okay, the news are over. Let me sell because I can get it cheaper later. So it depends on kind of the framework of the market. If the market is just completely bearish, it's usually you sell the news. If it's bullish, you obviously want to keep holding through the news.
Yeah, it's a good way of looking at it. And I think also the trap that I saw a lot from just anecdotally observing social media, etc., a lot of people wanted to sell the news until the day of the news,
Yeah.
or like 2 days before, and they were like, "Hey, actually, this is pretty cool," and etc. etc. And that's what you don't want to do around catalyst trading. Like once you've decided how you're going to act around it, basically, and then flip on the day you should be following your plan. That's usually bad. And also, I guess just some more context. I mean, ETH dropped like what 7-8% or like 10% on the low of the day on the day of the merge. And that's with a successful merge. Can you imagine if something had gone wrong with the merge, like
Oh,
something broke
yes.
or even a delay type of thing? That would have completely cratered the market. So we end up in this weird la la land world where ETH down to whatever 10% from high to low on the day is kind of the best case scenario for this piece of news, which again tells you the tone of the type of market we're in. Also, okay, I think it's a good spot to do some higher time frame kind of update overview type stuff for
Hmm.
BTC and ETH. I think there's a ton to say on the monthly. The monthly did look decent after we finally spiked previous month's low in the month before that, because those lows were just kind of sitting there, and that was becoming very annoying. I personally don't like to be like swing long when I know there are those very, very attractive points in the market below me. Same with being short when there's such equal highs above me, right? In this case, the lows got swiped, we rallied, and now we're back below the monthly open and also back below 20k, right? And I think you kind of had the monthly time frame as simple as it gets, where 20k is cyclical support. If that turns into 6k and breaks down, we'll see you in hell, right? And it doesn't matter what hell looks like. It's 14, 12, 10. Even though percentage-wise, those levels are really quite different, it's the same trade, right? It's you're basically buying deep previous cycles levels, hoping that the market will eventually recover. Like
Yes.
it's either extremely discounted or you're wrong about crypto, basically, which at least makes the decision tree fairly straightforward. On the weekly time frame, Don, I don't know how many. Like I know you and I discussed sort of the possibility of kind of ranging at 20k. I've always been quite pessimistic about that view because I just think the amount of real world churn and moves from one side of the high volatility spectrum all the way to the other, and the passage of time, all these other things I've ranted about on consecutive shows. I think it's
Hmm.
asking a lot for that all to happen, like in or around 20k, personally. And it would also mean that we kind of avoid another outsized downside volatility event, and so 20k has to become some sort of floor that just absorbs everything that happens over the next whatever number of months for the bottoming process, right? How many more weekly engulfings can this thing take as far as 20k goes? I think last week was the only kind of real weekly strength that we've had in some time. It was a weekly engulfing. It closed above the range midpoint, that kind of cluster you and I talked
Hmm.
about at
Yes.
21k or whatever. Now, my Monday video basically said, hey, this is all very cool, but can we just wait until CPI? Because it's much more important than the merge. In my,
Yes.
that was the argument I was making ad nauseam. It was the argument we made in the newsletter, kind of 2 weeks in a row and whatnot. And this current weekly just seems to be in the process of engulfing the last week's engulfing. It spiked above previous week's high, and it's currently, I mean, making its way towards the low, but it's also below that kind of cluster that we discussed, which doesn't look great. And again, there's 2.5 days or whatever to quote unquote rescue the weekly. But I think the constructive case is looking less plausible, given it's likely to close back below that pivot and as a sort of weekly engulfing, or at least like a failed breakout on the weekly time frame. And if you extrapolate that onto the daily, where the levels are like extremely similar, the range that we've been following for a while with that kind of 23k range high, that sort of 19k range low, and the midpoint at 21k or thereabouts. That just got completely sliced on CPI, right? Like if you look at
Yep.
the daily, basically everything was at its range high. CPI came in hot. Daily engulfed that completely nuked the market, and in this case closed through that midpoint as well. And now it's kind of at some support in the form of that pre-breakdown consolidation, but it's like not of I think it's a scalpable or a short-term tradable level, but I don't think it's like a structurally super significant level. And at this point, the range low kind of looks vulnerable again, or at the very least, this range midpoint 20.7k is once again resistance. It's kind of just a very impulsive daily breakdown following pretty bad macro news. And this isn't, again, any crypto-specific catalysts. If anything, the crypto-specific catalysts have been quote-unquote good with the merge working out. This is just more legacy spilling over into crypto weakness. I don't know about you. I think if you look at the 19K range low, 1, 2, 3, 4, if it goes down there, that's like the fifth test. And that's the fifth test after already a failed breakdown attempt, right? Which kind of played out. I'm not rebuying that level blindly.
No.
I can just say that as, outrightly as it gets. The best setup for it was probably last week where it closed below, closed above. I tried to buy it, didn't get a fill. You were buying stuff, that worked out, and that was a good trade from one range extremity to the other. But if we start getting fifth, sixth test of 19K, it really only becomes a matter of time until that thing breaks impulsively. And the way to view that wouldn't be just that level breaking. It would be to view it as the range from the 18th of June breaking, like that entire consolidation breaking to the downside. That's realistically what takes you to, the lows or much scarier prices, I think.
Yeah.
The higher time frames kind of look crappy. Monthly, yes, still at 20K. We know where the deep previous cycle supports are. Weekly, just basically reversed last week's strength and is below the pivot we talked about. Daily, engulfed from resistance, closed below the range midpoint, and the range low just looks not so good as a buy given how much time we've spent down there. What have I missed?
No, I completely agree. It's kind of funny when you draw like the all-time high in, as in like the highest price traded in 2017. You see that we basically on the daily, which is exactly resting on top of that. And it's the same actually with ETHUSD, where we're exact same level, like the 2018 all-time high, has been providing support for 3 times. So like it's obvious why it's been acting this way, like why we've been chilling around this level so much, because like people are buying basically the 2017/2018 all-time highs, both for Bitcoin and for ETH. But I do agree with you, like if that gives, right, and with these kind of ranges, what often happens is you get like an undershoot of the range and then you come back up and then you trade up. That seems more and more likely to me. I was in the camp, okay, this is just gonna go up for a while. But then when it rallied into resistance, I changed my tune. And I think there's a good chance that this range breaks down and then comes back and actually plays out bullish at the end of the day. It's just a question of how far can this range break down, right? Because it could easily go to like 17, 16, 15K. And I don't think like if I was in position from 20K and it went to 15K, I don't think I'd be too comfortable with it. I'd at least regret not having waited a little bit. So I'm just going to be not greedy. I already took, like on Bitcoin, my Bitcoin trade wasn't the best one. I got in with an average of 20K and sold pretty much 22-ish. But I already made that difference, right? So I'm like happy with it. If it goes back to 22, it starts looking really good again. So I'm more than willing to just wait for that. And I don't really have to take a trade at this level, especially like you said, given that we've been testing the same level over and over and over again. Something that I'm watching though is this weekly close. If that can close back above 21, above the cluster that we kind of have outlined, then I'll be more bullish from there on. But right now, for me, honestly, like the main story is the S&P, and the S&P looks completely atrocious. Like it's not looked this bad in a long time.
Since we traded in the 70s.
Yeah, I honestly, it just looks like it wants to break down fully, and it's on its way back to, I don't know if you have it up, but it's on its way back to like monthly support, where we wrote about it last time. It was like, okay, it's at monthly support, makes sense to be bullish.
Look at those monthly wicks, man. What are we doing?
Yeah, that's just how you trade. That's been the trade, right? Monthly support on S&P to monthly resistance on S&P.
Oh man,
it's just very clean. But I will not buy that support again, right? Who knows if it's gonna hold or not? But you're not gonna see me buy it again. And me saying I'm good, like me buying it again, just means basically whenever this hit high time frame support, I just bought crypto.
Sometimes to mixed results.
To mixed results.
Some of those early trades were such agony. Like I'm glad the ETH and Sol one rewarded
Yeah.
you in that case, because there have been a few where you were punting that monthly support and the S&P just teleports and
And Bitcoin
crypto
didn't do
just starts going
shit.
down 2% or something. That was
Yes.
agonizing. I know we sound like a broken record on this point, but the high time frame TA on the S&P has just been phenomenal.
Yeah.
And this isn't us just drawing levels after in hindsight, being like, oh, look how good this resistance was. No, these are levels that we've both written and talked about for like weeks beforehand, and they're
Yeah.
all really good. Yeah, I agree. I mean, that's certainly the tail case. Well, not even in tail case. That's kind of the main fear in the market, the opposite of a tail, that the S&P looks like garbage, and we'll talk about CPI in a moment. And if that goes, if that starts poking about sort of around its low or even retesting monthly support, that's your, that even that alone could be enough in the absence of a catalyst for a crypto breakdown, right? Because
Yes.
my personal view, and I've argued this, I think, on last week's show or maybe on Weekly Open, whatever, is that the market was being kept afloat by the merge trade, and there wasn't
Hmm.
really much else to it. It was the S&P holding support and kind of staying alive, but it felt like in crypto terms, especially the strength that we saw was entirely kind of merge speculation oriented. And if
Hmm.
that's gone and then the equities go, then I mean, I didn't see any huge argument for uh, crypto native strength in that sense. I think as far as S&P technicals go, the monthly support is like what, at around, as we discussed, 3700s, that little monthly cluster. I think that
Hmm.
did an amazing job for a fresh bounce, kind of first test best test. Like it took it all the like it soaked up like this really aggressive move into it and took it all
Hmm.
the way to monthly support basically in a straight line, right? Like followed on the next month was super bullish, and the month after that was, until it wasn't, like until it hit resistance, kind of did its job perfectly. Now if you look on the weekly time frame, that 3900 level that we have, the kind of over under whatever type of thing.
Yep.
That looks fucked.
Yeah.
Like that just looks really bad on the weekly time frame. It looks like a weekly kind of hit resistance, engulfs previous week's high, and then closes below support, and that just looks like a failed bullish pattern. And I think
Hmm.
at best we're looking at a move back towards that 3700 monthly support. At worst, obviously, it's just good old straightforward downtrend continuation. And then you have to look at what, 32,
3.4.
3300, yeah, 3400. Like the top
Yeah.
of that cluster is at 3400. My quarterly levels are at like 3200 range high, but it's basically new lows, right?
Yes.
I think if S&P makes new lows, what chance have we got? Type of thing.
Yes,
Um,
I honestly think how it's gonna be, if the S&P breaks down, crypto is gonna break down with it until people realize that the market is so small. Because let's be real, like the S&P is down like what? The S&P is down 20%. Bitcoin alone, and this is not talking about altcoins because altcoins are down more on average. Bitcoin is down 70%, right? So if the
yeah,
S&P goes down another 20%, where the fuck do we end up, right? But the
yeah.
thing is, I think at that point, like if you halve the market cap right now on of everything, so for example, like Bitcoin goes to 10K, ETH goes to 700 again or something or thereabouts, right?
Or it
The mar-
overcorrects in classic Ethereum fashion, right? That'd be the scary
or
one.
yeah, that'd be even more like who knows where that would
You
be.
have to buy that if it happens, though, right?
Yeah, you have to. And the thing is, the argument that I'm trying to make is that the market caps are going to be so small, and you have so much money in crypto. Even like in general, just people made a shitload of money that is now parked in like stable coins. That it's going to be really easy to buy that up, right? And a bunch of people have more than enough money to buy that dip up. So I think at some point, even if the S&P goes lower, like at low enough prices for crypto, you're actually going to see it decouple. I don't think that's going to happen at 20K. I'd be very surprised. But if we dump um, and you see any kind of buying, I mean, I'm going to hop on, right? Whether that be 14K or 12, I don't think it's going to go to 12, honestly. Like 14, 15, 16K. In that range, I think you're going to see big people step in, and that's not that far away, right? 20K to 14K seems like a big move, but considering that we've moved from 60, almost 70K all the way down to 20, that's not the biggest one.
Mm-hmm.
And at that point, I think we're going to see, if it happens, I'm not guaranteeing that it will happen, but if it does happen, I think we're going to see decoupling of sorts. And then it's going to be a brain dead buy that you can like double or triple your money on, even on Bitcoin. And obviously, if altcoins overcorrect, the same thing is true for altcoins. Some will die if that happens. Like always, every single cycle, stuff dies. But the stuff that has been showing strength, I mean, there's a few of them that we've covered. I like Atom, I like Matic, I like a bunch of them. Um, those are going to be interesting buys. And then you're going to see, like, even if it's just a mean reversion, obviously at some point you're going to have to assume that there's going to be a bottom on this thing, right? But even if you're just trading for the mean reversion, I think that's going to be an excellent trade. So I mean, I'd like for it to happen because it's a really good trade. But then again, it's also putting crypto under an enormous stress test because the industry is much bigger now, right, than it was back in 2018, 2017. And those are 2018, 2017 prices, right?
Yeah.
And then you have way less speculation going on. So, like, exchanges make less money. Everyone in the industry will make less money. If you think back, like, we had these massive yields at the highs, you have no yields anymore, right?
Yeah.
And you have like very little ways to make money when people aren't speculating in crypto. Because let's be real, like the way to make money with crypto is speculation at this point, right? So if no one's speculating, that puts the entire thing under an enormous stress test. And I think that's gonna be like 12, 13, 14K is where you're gonna have just in general, like big exchanges. I'd be surprised if like Binance or FTX didn't just step in and be like, okay, fuck it. This is a good price. And yeah, just start buying
The
basically. And
existential guardians of the crypto industry.
basically, yeah,
Yeah.
because I mean, if you think about it, like how much money Binance made during the last 5 years.
Oh man, their cash treasury is just the amount of money. It's basically like Binance, FTX, Alameda.
Yeah.
Yes.
And they have a
You know.
shitload of money and they don't want crypto to die, right?
Yes. Yes.
And
Yes.
at some point below 10K, crypto starts to look so bad that it might. And I don't think, like, even if you think crypto is going to zero, which I think is a stupid thought, but even if you think that, you would want to, like, if you're a trader, you would want to buy those levels because I'm sure they could defend it once, if not twice, if not three times. It's the same reason why I bought 20K because there was like a bunch of people that trade cyclically are going to defend this level at least once or two times. And you can see exactly what has happened, right? People have been buying that level. Obviously, it's not the strongest right now, but I could even see that be enough, right? The big people that trade cyclically, that just buy 20K, maybe you get like a tiny wick below 20K and then you go back up, can absorb a lot of this selling. Obviously, Free Arrows Capital just blowing up and taking everyone down with them made that a little bit more difficult. But at these kind of levels, I wouldn't be too bearish. It's more looking for a really, really good entry for me rather than, okay, I think this is going to go below 10K or whatever. I think if you're not looking for buys at this kind of price, you're in the wrong market. It's just a question of how discounted can you get it? Because I think 20K is already a really good entry in general. It's just you might have to wait for 6 months or for 12 months or for 24 months to actually see it pay off.
Yeah. Yeah. If your target for Bitcoin is that it becomes, or even ETH, ETH becomes internet money and Bitcoin eats away at gold, etc., and you're targeting 10K plus ETH and 100K plus BTC and new all-time highs next cycle, no one's going to sit there and laugh at you for buying 20K if they bought like 14K and then prices at like 100K. That's just like not something that happens. So I think that bit of context is helpful as well. And I think we should quickly touch on CPI. The long and short of it, as we wrote in the newsletter, was that inflation beat expectations again. It wasn't a huge beat, but it just still means inflation is hot, and it poked a hole in a lot of the narratives that were building around the crypto strength and sort of legacy strength as well. That, hey, maybe we've seen peak inflation, and then the rate of tightening will have, the soft landing becomes plausible. We won't have to tighten as much. We get back to easing a lot quicker. The economy is in better shape than we thought, so on and so forth. And so it's basically some idea of this tightening regime coming to a close sooner than anticipated. Those narratives don't seem empirically tenable at the moment. It just still looks hot, still looks bad. And you'll recall that we had a 0% reading recently on kind of month-on-month inflation. And so the idea was, if it were peak inflation, you'd get like 0% and then maybe 0% again, and then actually just that number going down instead of going up, sort of month on month, and then you could make a case for a trend, right? Like, oh look, well, looks like inflation is starting to trend down month on month because we were at zero, we zeroed again, and now it's actually going down relative to last month, that type of thing.
Yes.
And also at the time, you'll recall that Bitcoin and ETH, etc., were at range highs. So if you get like very soft inflation and then risk assets rallying off of those soft numbers, that's your kind of, as we wrote about, the Goldilocks scenario for crypto, right? It looks like we've seen peak inflation, prices at like very important support and cyclical levels, and you get this robust, relatively to what we've had, like kind of helpful economic data for a change, and that's your big mean reversion scenario where ETH goes to what, 2.4 monthly resistance, BTC goes to 30k, 32k, whatever, and we all get to sort of play that visible high time frame bounce. It's just not, didn't happen, and it's not supported by the evidence. If anything, the evidence currently suggests kind of more of the same, right? Now there are some changes. The dollar's a lot further along than it has been. Oil isn't at 100 type of thing,
Yes.
but still kind of bigger picture, bigger liquidity picture remains unresolved, and that's just not great for risk assets. I think that's the CPI story in a nutshell there. And I think levels-wise, we've kind of spoken about it. S&P's got that weekly that it looks like it's going to close below at 3,900 off the back of this awful-looking weekly engulfing. That would just be bad, man. That would just be bad. That's like one of the best weekly levels available, and just breaking through that in that type of fashion on that type of news isn't good. It makes me think of the more recent weekly lows at 3,600 as the next target, and that's also in the area of monthly support. I think that monthly support is good for one strong bounce. We got it. I'm not sure that's a bottomy type of monthly support. I could be wrong, but that's what my gut tells me for the time being. And in terms of like bigger structural levels for the S&P, I think you've got the monthly at like what, 3,500, the top of that cluster. Mine is the quarterly 3,300, but you can just draw a box and it's all the same shit. The same conclusion arises, which is that's what, like 15% ish lower if this high time frame support breaks until the next high time frame area, 10 to 15%, and that would most likely decimate crypto prices up to a point. And that point, as you mentioned, I think it's very plausible as well that wherever market caps get so low that crypto native wealth is enough to at least stop the bleeding because they're directly incentivized to do so. And whether they're ultimately successful or not, we don't know, but the likelihood of it being at least good enough for an exit bounce is pretty high. So as a trader, that's a trade worth taking.
I mean, that level on that level on the S&P is really interesting as well because it's the high before COVID. So like you just look at it and you're like, okay, this is like basically like Bitcoin at 20K. It's the same story.
It's cool. We just do a little wiping out of 2 years of price action. No big deal, guys.
Yeah, but I mean, like all of that price action was bullshit to begin with, right?
Yeah.
Like that's the funny thing, right? Like everyone kind of knew, like we were just looking at like everything going up, everything, and everyone was like, okay, fuck it, we just rolled it. GME happened, AMC happened, all of that kind of garbage happened basically, and everything just went out of whack, right? And basically, if we go back to the COVID highs, that's back to normal prices again, and that just like that terrifying us is a little bit scary, right? Like that 15% drop back to COVID highs. It's like such a big drop if you kind of, because I mean 15% drop from now, we dropped 20%, everything went to shit, right? People are freaking the fuck out freaking the fuck out everywhere. For 20%, if we add another 15%, they're gonna be even more crazy. But it seems like a really good level to me. So like 3.2, 3.4K, if we get there, that's definitely a buy. If that's the low or not, I don't know, but I think like that's just something you have to buy. And that's the same, like that's gonna be accurate for crypto as well. But like I said, I could see, because the market caps are so low, crypto bottom before it, right? Like if you see big absorption in crypto, while the S&P goes down, maybe that's an interesting thing to look at. I will definitely be looking at it, and I still think anything below 20K for Bitcoin, and anything in the 1K range for ETH is really, really interesting.
Agreed. Yeah. Well, this is one definitely worth keeping an eye on. But I mean, stuff doesn't look good. If we talk about this off the call, we'd just be like, hey, this CPI shit came in hot, merge is over, supports are broken, these weekly moves that were constructive seem to be eating shit now. BTC below that range midpoint. ETH kind of broke down from that higher time frame mid 1500s cluster. That seems
Yeah.
completely toast. That doesn't look great. And the S&P looks like it's going to fully engulf below weekly support. And NASDAQ looks like it's going to close back below, at least on the weekly, on daily time frame, the upper boundary of that monthly cluster. So bad
Yep.
news, narrative over, stuff breaking high time frame support. What are we supposed to say realistically?
Yeah. There's really not that much,
It really isn't
honestly.
that much. Yeah. Should we look at some news, or is there any final technical level stuff or things you're looking at you want to cover?
No,
I think that's it
let's have a
mostly.
look.
Like the good news is done, the macro is shit, and I think the good trading levels have also passed. You know, like those
Yes.
range highs were good on BTC, ETH. As the S&P weekly support was good. Those were all good levels worth building kind of ideas around. They're fucked now. So wait for something else, basically. As boring as that sounds. And maybe next week it'll be clearer. We'll say, oh, look, we built some candle structure. You can reclaim this. It'll look decent. We had a really bad week last week, but a lot of it got absorbed and it looks better now. Like, we can always pivot if the data supports it. But at the moment, it's just like we're kind of out of good news and out of good levels, right?
Yep.
It is what it is.
It is what it is. That's 1-to-1 what I was thinking. Oh god.
Cool. News. So the Ethereum merge is done, opening a new era for the second biggest blockchain. Good job, I guess. You know, that's cool. They did it. They did it properly. I know it was delayed and all this other stuff, and people thought it wasn't going to happen. But it seems to be working, and nothing's broken yet, or at least nothing obviously broke, which is good.
Yeah.
It says here that on this CoinDesk article that when the merge officially kicked in, more than 41,000 people were tuned into YouTube to an Ethereum mainnet viewing party. That's a depressingly low amount.
It is, yes.
I'm sorry, well, didn't the Safe Moon developer call at the Cycle Top have like 10 zillion live viewers? And here we have the Ethereum historic merge, and like no one gives a shit, which is sad.
It is very sad. I mean, that's basically showing you how deep into the bear market we are.
Yes.
And how little people still trade this thing. Because if you're trading it, right, actively, you have to watch that. Or like you would watch it. It's just how it goes, right? If you're in an active trade that isn't a long-term, high time frame trade, you're gonna watch it. It's the same with, like you said, the Safe Moon thing, where people are like, okay, I'm speculating on this, I have to watch it. And that number being that low for the biggest kind of news event in crypto in who knows how long, maybe ever. Not necessarily. I think like the Bitcoin fork was maybe bigger, but still, it's a big thing, and that's depressingly low, like you said. Yeah.
It feels like the last kind of real comparison, like the Bitcoin fork was. Those were so much more dramatic. And I think part of the reason was that, well, first of all, the market was less sophisticated, right?
Yes.
But second of all, I think the other side had some pretty visible leaders, and they who kind of played up the drama and definitely made it kind of seem competitive. I think that's what it comes down to. This wasn't really competitive as far as ETH proof of work flipping or taking over, etc. type of thing, because the stablecoin kingmakers decided they were going to support ETH 2.0, and the fight was over at that point. You know, we've got so much TVL in DeFi, all the stable coins built on ETH, etc. As soon as Tether and USDC basically said, yeah, ETH 2.0 for us, it's game over, right? It turns into just like maybe some sort of speculation on hash rate and where that hash rate is going to go, and some short-term trade on the proof of work fork and people rushing to dump them basically and playing musical chairs with those. But it was never really close, in my opinion, as far as which side was going to win. The only other possible volatility vector would have been if the merge failed or had huge technical issues or broke something, but it didn't. So this was the kind of milquetoast scenario.
Yeah, I 100% agree.
So congratulations, ETH, on the merge. I think there's going to be a lull in this type of catalyst, so people just forget that the merge happened, especially because we don't get to see a lot of these deflationary mechanics fully play out in a market that's dead, right?
Yeah.
But I think for next bull market, we'll see the merge come back like with 20x the narrative strength. being like, oh, look how huge this network is. Look at all the TVL, all the stablecoins and DeFi and NFTs and all this OG behavior built on ETH. And in the bear market, it successfully, transitioned to proof of stake, and it's been working flawlessly. And there's all this interest rate products now, yada yada. When you're that underpaid intern at UBS or some other bank writing about ETH at the cycle pico top, because finally your clients care about it. That's definitely the type of stuff that lends itself well to institutional narratives, as we like to call them. Let's just hope that institutions buying ETH are better than the institutions buying Bitcoin, because yeah, performance-wise, it kind of speaks for itself. But good for ETH, good for the merge, and of course, there's some bad news that comes alongside it, or at least speculation of potential consequences. I find this debate super, super boring. I don't want to spend a lot of time on it. Ethereum could face SEC scrutiny after the merge, according to the Wall Street Journal, and it's this whole thing about the fact that it's proof of stake now, and there's a yield attached to it that it could be a security. And it was Gensler saying, from the coin's perspective, that's another indica that under the Howey test, the investing public is anticipating profits based on the efforts of others, being like the validators or whatever. There's this whole indicia, not indica. I'm not talking about weed. I'm talking about evidence. And yeah, Gensler appeared before the Senate Committee for a regular SEC oversight hearing. He also said he believes a crypto exchange offering staking services to customers looks very similar with some changes of labeling to lending. So maybe this attracts more regulatory scrutiny or whatever. My ideal scenario for this is that we at least get a whitelist for BTC and ETH, and then we can worry about the shitcoins later, or that the CFTC takes more jurisdiction over this stuff, because I'm really tired of the SEC's incoherence and to a large extent incompetence with these things, like the futures ETF while GBTC exists, all that type of stuff. I'm just really, really bored of it, and it also just leads to a very boring discussion on Twitter, like people nitpicking things the SEC has said before, being like, well, Bitcoin is clearly exempted as a commodity, but is ETH? And that's a debate that keeps going on. I guess thankfully the answer is we'll find out in the next 6 to 12 months as this kind of proof of stake transition embeds itself into the ecosystem. This is boring, right? What do you think about this?
Yeah, I don't think
security type of stuff.
Yeah, I think ETH's been around long enough that it's pretty hard to pin it on something like this. I think it's going to be fine, but it's a really boring topic, and like you said, the answer is let's wait and see. Because I don't know, I don't think the speculation on it makes any sense. You just give it some time. I don't think, like, personally, I'm not worried. If I'm holding ETH, I'm not worried.
Yeah,
but that could just be me taking it too easy. But I do have trust that this is gonna sound stupid, but the people working at ETH or for ETH know what the fuck they're doing. They're pretty smart people, which kind of speaks against the decentralized side of things, right? When you have like, oh yeah, these people that are working on it. But yeah, I don't know. I have very, very little fear of this kind of going wrong, personally. So
I mean, if any two are safe, it has to be BTC and ETH.
Yes, right? Exactly. So I don't think they could or would move against it too much.
I think it's been long enough to kind of cluster those two together at this point.
Yeah.
South Korean authorities know where this story is going.
Yep.
Seek to invalidate Do Kwon's passport, according to a where is this publication? Yeah, Korean newspaper Munhwa. I've probably completely butchered that. But yeah, news comes a day after the Seoul Southern District Prosecutor's Office issued an arrest warrant for Kwon, who's been charged under the Capital Markets Act along with 5 others. So it goes on to talk a little bit about the Terra USD depegging and Kwon trying to rebuild the thing, etc. So I think there has to be some investigation or some justice. I'm not the type of person who just looks at a case and say, put this dude in prison, even if I personally don't like them. I think it depends on the laws, the laws of the jurisdiction which you're operating in and fair application of those, etc. But for a while, it just seemed like he completely got away with it.
Yes.
Because there was no investigation, nothing from the prosecutorial side of things, no kind of public stateside scrutiny. And I just found that super weird because Tornado Cash developers were getting arrested for writing open source code. Meanwhile, large Ponzi operators, basically, just kind of walking around giving media interviews. And I found that to be strange. I wanted at least some sort of investigation, be it civil, criminal, whatever it may be. That's the absence of that was jarring. That seems to be gone now, and looks like things are moving along. I still think people are going to forget about this, you know?
Do have a feeling as well.
Like, people are going to forget about this. I think even worse, as we discussed, there's a decent chance, unless he ends up in jail or something, that he makes a nice comeback in the next bull market.
I think there's even a decent chance that if he goes to jail, he's still gonna make a comeback.
He
Oh,
becomes
that's
a
how fucked
martyr
up
or
the market
something.
is. Yeah, it's so bad. I guess, and this is just how people's minds work. They get fucked, and they're like, oh yeah, but this guy is a victim too, and then they want to support each other and the guy in charge to kind of make it up again. And then I don't know, it just you fall for something like this, just let it go. It's just, I mean, why torture yourself by going through this over and over and over again? Just let it go. But yeah, I honestly like just put him to jail. I'm not like you. Where I'm like, okay, proper like laws, whatever. Just put the guy to jail. Just look at his Twitter feed and then put him to jail. It's not okay. Like I don't agree with anything or like almost anything that he's been writing or how he's been behaving in the last few weeks. It's just kind of fucked up in my eyes. Like the way, like no humility whatsoever in my eyes.
Yeah.
Anyway, like I don't see where he's learned his lesson or like is gonna change. He's just gonna do the same thing over and over again if people let him, and the public is going to let him apparently. Just look at the likes on his tweets and kind of how people react to what he says. And if that's how it's going to be, you're going to have to protect people from themselves. And I hate to say this as a person in crypto, but I mean, just you cannot have this happen again, in
You
my
get this
opinion.
weird Stockholm syndrome thing in crypto where someone, like a dev or a project, will completely fuck you,
Yeah.
and you'll lose like everything. But because you're so embarrassed, and because you see that as the only the same path to ruin is the same path to redemption, they stick by the thing that hurts them the most type, behavior.
Yeah.
And it's so common with like coins, with founders, with like ways of trading, whatever it is. A lot of the people are really bad in crypto at moving on, and they attach themselves and their personal lives and their social circles and their identity with like a specific dev coin movement team, social group, whatever it may be. And moving on from that, people are terrible with it, even if the coin is completely dead, irrelevant, what have you. If that sounds like you, get out. It's never been the right way to be in crypto.
No, it legitimately never works out. I've never seen it work out. That like hostage syndrome that he talked about, yes, it's the typical bag holder syndrome. And those coins, like every time I see that in a coin that has gone down, I will not even touch. I will not even think about buying because there's so many bag holders that's just gonna pray for any kind of move back up. That are gonna sell into you. It's just nah, thank
It's
you.
like if your dev starts talking about prices and short
Oh
squeezes as
yes.
well, right? It's like one of those things that
Mm-hmm.
you shouldn't
It's
know who
just
the dev
escape.
of your project is. Like that's or do you remember the dev is dead meme
Oh yes.
during the bull market? That's like a pretty good. It was certainly better than suck the dev's dick, as we've learned. I mean, this one's boring. I don't know why it's here. It's a diamond. I guess this is one of those. Is this a bottom type thing? Diamond tokenization startup raises 30 million.
Oh god.
Yeah, and the classic claim is following 20% returns last year, the Diamond Standard coin has continued to generate a positive return this year, while the S&P 500 is down 14% and Bitcoin is down 50%, said founder and CEO Cormac Kinney. Investors need a new uncorrelated asset class, because Bitcoin didn't do that. And this capital will enable us to increase capacity. I don't know. I don't like it. I
Nah.
think as far as NFT type use cases go and tokenization, the really lazy real world analog type of things, like, oh well, look, there's a real thing and now we're going to nuke the real thing and you get a token and
It's
whatever, the
so
token
stupid.
represents a claim to the real thing. It's so fucking lazy. It's literally just like, it's not even first order thinking. It's like 0.5 order thinking. I don't know what to call it. It's so base level and so uninteresting. And also, yeah, it's like 20% Diamond Standard coin. I'd like to look at the tokenomics and distribution and liquidity, more importantly, of
Oh,
that.
yes.
Because that's really the main thing, right? When you come to like exotic things, like, oh well, the art market has outperformed the S&P. It's like, okay, I want to sell 500 lots of the of the art market immediately. Like, what kind of price can you get me? That
Yep.
tends to be the real thing. When you look at just percentage comparisons, a lot of the time you should ask about the liquidity profile of those holdings, and a lot of the time it's garbage and it's not representative at all. And I think the NFTs in general have taught that to a lot of people, but especially when you see like exotic, oh, don't trade the S&P, you should trade rare bottles of wine. It's like, fuck off, man. It's not a liquid market. Don't make that type of comparison. The price discovery process is nowhere near as accurate as it would be for such a large liquid instrument.
Yeah.
But
Well
hey,
said.
congratulations, I guess. Diamond coin. Imagine, since you're gonna marry your girlfriend soon or whatever, Don, you just get her some tokenized diamonds instead of like a ring or whatever. Just like just send her
Oh
some
no.
NFTs.
I mean, that's
I'm
even
sure
worse
that would
than
go
real
down really well.
diamonds. Yeah, I got it. I mean, it's just I don't understand how you could even think that that is a good idea. I think I would value a picture of it as much as I would probably value a picture of a diamond more than one where it's like someone just destroyed a diamond and then made an NFT. Like,
Yeah.
how stupid is that? Like, I would not want to own that because it's so fucking stupid. It's like, no, no, thank you.
Yeah, the destructive thing is dumb. This one might just be tokenization, but why would you just want the token instead of the diamond itself? In any
Yeah.
case, by the way, this is the most blatant tell ever if you want to find out whether someone's crypto native or not, right? If they just go for like this type of basically tokenize anything type of logic without using the properties of either ERC20 standard or whatever, like using the actual tech for either royalties or using the programmatic functions of smart contracts. If you get someone who's like, well, there's a thing and we can make an equivalent thing on the blockchain and that's where it stops, like you can clearly tell this person's not like crypto native or whatever a lot of the time. Anyway, it's dumb. GPU miners left searching for profit post merge. I guess this is a bit of good news, to be honest. Like, yeah, for those miners, I mean, they knew it was coming, so hopefully they like hedged or did whatever. Even though we know that miners are like notoriously terrible at thinking ahead and inventory management. But at least it means GPUs are. I mean, have you seen the amount of inventory that like Nvidia has and all that type of stuff? Like, it's actually affordable again. So if you're looking to buy a new rig and build a new office space and get a new computer type of thing, I think in the next few months is probably one of the better windows you're going to have. Especially, I think there's a 4000 series coming out on the Nvidia side of things, and they already have a ton of inventory. You can probably get some very, very good deals on the most recent or the current generation of GPUs. And I think also just narratively, it's quite nice with the merge and this type of stuff that crypto, at least the lowest hanging fruit, lazy arguments to, oh, NFTs burn the environment, boil the oceans and make GPUs unavailable. Like, if that's your best argument against like a sort of decentralized internet money base layer, then I think you're a fucking idiot. But even that argument has been to a large extent taken away from you, right? So as far as low hanging lazy criticisms, it's nice to chalk that one off the board.
Yeah. The gamers are finally not going to hate us anymore.
Yeah, no, they'll
Which
find other
is,
reasons, I'm sure. They just hate the
oh, yeah.
financialization, right? The fact that there's like
Oh,
someone is
yes.
making money and it's
Exactly.
not them to some extent. That on its own is enough. But yeah, maybe if we boil fewer oceans and they have more GPUs, we can come to some sort of alliance.
Yep. I mean, yeah, I'm down for it. I think it's cool. It's going to change a lot of things in the near future and in the far future as well. Just like having the second biggest cryptocurrency kind of go through like this big of a change. So it's going to
Seamlessly,
be an
well,
interesting
so
one.
far
Yeah.
seamlessly, but it looks good.
Yeah. So that's going to be like in general just interesting to be around, and I'm very much looking forward to it. I wonder like what is going to come up with that change, because things change, right? And this is like a big change, so you're going to have differences in how it's going to trade, I think. And you're going to have differences in generally how the market behaves, which I don't know. I love when that happens. That's where you can kind of find edge, because no one really knows um, how it's going to behave because you don't have any history. So it's going to be fun. I love it. We'll see what kind of edge we can find.
It's a good time to be around, and I'm sure on Casual Friday in 3 years, like, remember when ETH just transitioned to? I don't know when we turn into 70-year-old men in 3 years, but that's clearly what's going to happen at this rate if the market continues like this. Don, as an esteemed Bored Ape holder, I'm sure you're very active in the governance forums.
Oh God.
And so this has been on your mind, giving you sleepless nights for quite a while now. I'm sure that Apecoin's Ape could see selling pressure ahead of major token unlock. Over 25 million Ape tokens will be released to launch contributors, representing nearly 8% of the circulating supply. How have you been voting?
That one, I don't have any coin. I just have the apes. So I'm not at all. And two, like, I don't really give a shit.
Do you think they'll dump their... Because, look, the whole thing is, like, the amount of wealth that has been created for someone who just minted an ape photo, right? And held on to it, which is the hard part. Like, I'm not downplaying it. Holding it into all that mania to get, like, the other side drop and the mic and the pets and the coins, all this other stuff. It's impressive, right?
Yeah.
Then that's some pretty diamond hands. Now, it could be diamond hands because the hacker has your NFT and you can't sell it, but it's it's diamond hands nonetheless. And now this is like quite a large percentage of the supply. It's like 8%, right? My 50 IQ take is that a lot of these guys are hurting in USD terms and also in ETH terms, but especially in USD terms. A lot of these guys have not had like great liquid opportunities to get out, or at least ones that they'd want to take. Like, they probably don't want to sell their ape because it's their whole life, right? And some of the associated stuff with it probably don't want to touch either. As far as things you'd be willing to dump to secure something, or you're least reluctant to get rid of, this type of unlock would be, I think, towards the top of the list, right? And you can still keep all your Bored Ape ecosystem type of exposure for the most part. And also, if you look at, again, the market, it's the pressure of the market trend we're in, plus being down horrendous in USD. Getting this type of liquid unlock, I think putting those two together contextually, it's not terrible to assume that it might just sell price down a bit further. That's kind of my base level analysis. Like, maybe a lot of it is priced in and baked in. It's been trading very well technically, actually, with this chart that I've got up here. But do you think this is one of those, not sell the news type of thing, but very straightforward unlocks in downtrend plus holders pressured equals number go down on token whose value isn't immediately clear at the moment?
Yeah, I think so. It would just make sense to me. I wouldn't want to be holding it necessarily. I mean, I'm not, but it's also an easy way for Yuga Labs to make more money, right? Because if they sell apes like NFTs, it's really easy to kind of understand. It's all on chain. If you sell coins like this or distribute them or like whatever, it's much easier to cash out. Now, I'm not saying they will. I have no idea. I'm not really into the ecosystem too much. I guess I have too much money in it not to, but I really don't give a shit. But yeah, I think just from the looks of it, if you have that kind of unlock in a bear market, you would expect prices to go down. And it's going to be the most interesting part about this is going to be to see the reaction of it. So basically, are you going to see a sell-off or are you going to see strength? Because if you see strength, that's clear that there's big buying there. And then there might be a trade on the long side. And if you see a big sell-off, it's obvious that it's not time yet, right? And then you don't want to be buying at all. So that's where you can kind of judge basically how strong the market is. And I love news for this kind of things. It's the same with the ETH merge, right? So basically we had positive news and price didn't move and then started selling off slowly and then suddenly, right? And when you see that, it's really easy to trade it because, or like at least to stay away, right? Like I sold my ETH at 1.75. Do I want to get back in? And then I just observed the news. I'm like, okay, actually, like positive news. The merge didn't take it to zero, resulted in a sell-off until we at least reclaim that entire sell-off based on the news, right? So until we kind of go back above 1.65 at least, I'm not going to be playing any momentum to the upside on ETH unless it just giga nukes. And the same is true for Ape in that instance, right? You just look, okay, how is this going to behave? Is it going to be strong or weak into it? And then you can kind of judge the market much easier, because sometimes you get lost in the up and downs. This is like a clear indicator of hidden strength or hidden weakness.
Yeah, that's a
And
good way of looking at it, right?
yeah,
Like, how much is the market willing to absorb an obviously bad thing or an obviously good thing, right? And then you
yep.
kind of infer from that how strong and convicted, if you will, the holders are, or people trading it, which is a good way,
Yep.
I think, to gauge these things. It reminds me of the old bull market strategy, right? When you get the 10% dip that everyone shat themselves over, you kind of look at which altcoins dip less than others, or you look at the BTC pair or whatever else that gives you a sense of, the ones where some bids are getting filled and the market's more willing to soak. And then when the market reverses, you play those coins which showed the initial strength in the first place.
Hmm.
Um, yes, we'll keep an eye on Ape. I mean, we won't realistically, but it was in the news, so there's always that. And the final one is FTX is in the lead to buy crypto lender Voyager Digital's assets out of bankruptcy. And this is an article from a day ago on CoinDesk. Looks like the FTX Voyager thing is still on, and looks like there's a bit of a bid war going on between. I mean, there's also Wave Financial, which is a digital asset investment firm that wanted, and FTX had the higher bid. Still seems like we're dealing in bailout land in the crypto world, and this stuff that, and there's still Celsius court case going on. We had some Kwon news. This kind of overhang takes a while to get through, right?
Yeah.
Especially if there's like a legal process involved, as it is in many of these cases of Chapter 11 bankruptcy, etc. This isn't like an easy resolve, quick bounce back type of thing. There's a whole legal process and discovery, and an entire procedural base you need to get through before anything can be done. But I think still it's cyclically useful to point to the fact that big incumbents with a lot of money are lightly starting to not backstop the industry, but certainly show an interest in distressed assets, right? And that happens much closer to bottoms than tops, you can put it that way. I think there was an interview where Sam said that Bitcoin hadn't reached the levels where they'd be interested in buying kind of spot as FTX to both provide liquidity and because they think it's cheap / to save the industry or whatever else. For him, I think the price he said was like 15 to 17K. And then he says that a lot of crypto businesses, again, will die at around 10K. So if you want like a max distressed industry reaccumulation, whatever type of thing, the numbers loosely floating around are somewhere between 10 and 17K. Which seems like a big range, but if your target is multi-cycle new all-time highs in 1 to 3 years or whatever it may be, that's pretty tight as far as macro position trading goes,
Hmm.
And to your point, what's the difference between 20, 17, 15, etc.? If you're targeting 100 plus, it's less, less so. And especially because the opportunities that will come in the uptrend that follows if you manage to get some exposure where it matters, those percentage points won't make the biggest dent after all. I think that's a point worth revisiting. If you're just staying out of this waiting for a clear new uptrend, that's also fine, most of the bull market flexes that make people very happy, they're very rarely the whole thing of, I bought the bottom on BTC and ETH and I did nothing, right? It's always the next cycle's best performers and kind of mid bull cycle, if not end bull cycle, people really make it crazy. And then it's just a question of holding on to that. So if you're not terribly interested in bottom fishing, or you hate these conditions and have the luxury of being able to come back later and not fish, I think that's equally fine. I'm not going to criticize someone who wants to deploy their capital kind of early to mid uptrend as opposed to the bottom of downtrend. I've equal respect for people who can just take advantage of what they perceive as the best opportunities in that regard. And I think those two are terribly different as far as returns go. If anything, you have a slightly easier time holding if you're buying obvious strength, even if it's multiples up from the bottom, as long as you don't kick yourself over it. But you and I are traders with egos, so we obviously want to
Yep.
get fishing at really good prices and do less when the market gets really hot, essentially.
Yeah, I mean, I will not hate on anyone that buys 40K and takes it to 100. I think that's a really good trade. I want to buy low because I can make more money that way. But I still think that's a very valid way to trade, basically. And people are going to be like, oh, this makes no sense. You could buy this for 20. Why would you want to be buying it when it's like higher? But you're not going to have to sit through basically this pain. And this pain can get extreme, right? And no matter how highly convicted you are, you just need one moment of weakness where you sell it all at the bottom to miss it all out, like to mess it all up and to miss out on the entire rally. And that's not going to happen if you buy into like very, very obvious strength, right? Because then you buy and you're going to be pretty much immediately into profit. And even if there's going to be a pullback, it's a shallow one. And then you're going to have a much, much easier time. So advice wise, you can either just buy it and just walk away and never look at it again for like at least a couple of years, or you can just buy into strength, or you can just put bids and pray to God that this is going to go lower so you can make more money. But that's never guaranteed, right? People take this for granted, like these price dips basically, and they're like, okay, I can buy tomorrow, I can buy in a month, I can buy in 2 months, and I'm going to get it cheaper. Kind of reminds me of ETH back at 84 in 2018, where I bought a bunch and then I had people come to me and being like, hey, why are you buying at 84 if you could buy at $15, right?
Yeah.
And I'm like, okay, at some point there's going to be bottom. And those people that were waiting for 15 or 20 or 50 even, they didn't get an entry. And then it's easy to say, hey, this is just a bounce, I'm not going to buy. And the next three trades you're not going to buy because that's the confirmation that it's just a bounce and it's still going to go lower. And then it keeps on going up and you sit there, you don't know what to do. So sometimes if you're that kind of person that cannot change their mind, sometimes it's just good to just buy and just walk away if you have conviction in this space. Obviously, if you don't, you wouldn't want to be doing that.
Yeah, and I think also if you find yourself greeding consistently as price goes in your favor, you should pick up on that behavior as soon as possible, you know? So if you targeted, let's say 18K and it goes to 18 and you don't buy it, and it goes to 17.6 and you don't buy it, and it goes 17.2 and you're like, oh, well, I can buy 16, that type of like on the fly readjustment in the moment, even though it's hit your targets, you should have a very high evidentiary threshold for that, Like, this is my plan. The only thing that could change my mind is this very important thing. Otherwise, I think you have to just suck it up as far as the imperfection goes and do business where you decide to do business. Because you can always find ways to FUD yourself in and out of a position. And if you're lowering your targets as the market goes lower, or raising your targets as the market goes higher, you're just like kind of a slave to short-term momentum, and you'll probably end up with egg on your face. If that sounds like you, that's probably worth an intervention. That's all from us. Don, any final bits, pieces to mention? It was a bit of a different episode, simply because all the good levels are gone.
Yep.
And the technicals just look kind of the type of TA where you need to wait for like a week or two and hope that you get something new, because at the moment it's just like stuff broke, stuff rejected from resistance, macro sucks, and the S&P kind of looks cliff divey. So what are we gonna do? We can't just shill buys or draw levels that don't exist. It's sort of just the best trade. It's one of those cases where the best trade seems to be over for the time being, right?
Mm-hmm.
Like the clearest opportunity has kind of run its course. The clearest narrative has run its course. The clearest support on the S&P 500 has run its course. The best levels have kind of played out. And now you wait. And it's very unlikely that you immediately get another equally attractive opportunity afterwards, especially in these conditions. So it's one of those where if you did well, cool, just chill. If you didn't, sorry, read our newsletter or something. That's mean, but you know what I mean. The best opportunity is gone, and I think the worst thing you can do is try to force a similarly high conviction trade when there just simply isn't one in the market immediately after one has already taken place. So maybe we'll have better news and better updates and more meaningful chart stuff next week, like maybe the S&P reclaims and crypto finds some strength, or whatever, the narrative gets absorbed, we reclaim some of these dumps. All of that will be interesting, but for the time being we're sort of left chatting through news and waiting for better levels, because the good ones are in the rear view mirror.
Well said. I totally agree.
Cool. That's all from us. I hope you have an excellent weekend. To our listeners, leave a like, leave a comment. What was your favorite part? Obviously me speaking. Least favorite part, obviously Don speaking, but just to make sure that that's clear, leave us a comment. Thank you again to FTX for supporting the show. Get the mobile trading app available in the description below. Track your portfolio, hide your portfolio, trade between coins without fees, no leverage, no liquidations, very simple type of stuff. So make sure to have that with you. Getting liquidated on your phone on leverage is one of the most depressing experiences I've ever gone through. I don't recommend it. So the spot trading available there is a good way to go. That's all from us. Usual packed content next week with Monday markets, Tuesday newsletter, Wednesday Don girlfriend stream, and then Casual Friday once again. So be there for that. Another week, Don, another week down in the trenches, and hopefully some more radiant things to talk about next time. Congrats on the merge, a historic episode and all that. Let's hope the market agrees in the near future. That's all from us. Take care, and we'll see you next week.
Bye-bye.